The majority of traders spend years trying different indicators, consuming random videos, and still lose money. But the truth is, profitable trading does not come from finding a secret indicator. You really just have to understand how price actually moves. So, in this video, I'm going to break down the only technical analysis concepts you truly need to master the markets, specifically when it comes to supply and demand. So, get rid of your distractions, open your chart, and let's go. Welcome back to Marked for Success, where I help beginners become profitable day traders. The first thing you want to do is head to TradingView, and we're going to do somewhat of a top down analysis. And we're starting from the daily time frame. Now, the only thing I want you to focus on is what's happening on the right side of the screen at the very end of price movements. All right, so two things I want to bring to your attention. The first is the daily bearish break, and the second thing is the color of the last daily candle, which is red. Now, what you're seeing on the screen is how price closed on Friday, May 22nd. And since we're day trading, the only thing we want to pay attention to is what's happening on the lower time frame. But here on the daily is always a good place to start. Before we move along, I just want to point out the support that price made as well as the resistance, because this will be very helpful as we narrow price down. Okay, the next time frame you want to head to is the 4-hour chart, and we're looking for the same thing, a break. And since price is bearish, we're looking specifically for that bearish break. As you can see, we don't have one. We only have wick breaks, and that's because there is a 4-hour demand that stopped price from making that hard break. And that's fine. We still see the 4-hour candle being red. So literally anything can happen. So we have the last candle's color, and we notice that there is no break. We can still buy, we can still sell. You want to mark these out as you go along so you don't have to keep them on your chart. I'm just using them to narrow price down, and so you have a better visual representation of what you're looking at. Now here on the 4-hour chart, you can opt to mark the support as well as the resistance, or you can choose not to. And we're getting closer. So on the 1-hour time frame, this tells a much clearer story. I like to call this the magic time frame. We have several breaks of structure, as you can see here, and price is moving rather bearish. And there was a return to this 1-hour supply right here, and price moved back down and created a whole new supply. So we have the break that we're looking for. And next, we want the color of the last candle, which is green. And since there is an actual supply, you're not going to mark the support or the resistance here. You're just going to use the supply to narrow the price. Attention. On the previous charts, the color of the candle did not matter until now. Now, on the 1-hour time frame is when the color actually matters. I just needed you to get in the habit of paying attention to the color. So we have a bearish break and we have a bullish close. What does this mean? It means that you can either buy or sell depending on if the market feels like doing either. But since the last candle was green, I'm looking for buys under certain conditions. And if those conditions don't show up, then we're possibly going to keep selling. But my bias is buys. Don't worry, as you continue watching my content, you will understand fully why I said that. Now let's look at the 15 minutes time frame, because that's what's going to really determine what happens next. Awesome. So we want to keep in mind that our bias is bullish irrespective of all the breaks of structure, which means when the market opens on Sunday, May 24th, I'm looking for the market to go up rather than down. But if I want to participate in the markets, I'm going to need to see a 50 minutes hard break of structure. Then I will start looking for trades. So the first 50 minutes after the open, I'm not looking to do anything but wait for the candle to break above and give me the go ahead to start looking for lower time frame buys. Now, remember, the market has a mind of its own, so I'm putting my attention on the small consolidation and telling myself that if price goes up, I'll buy. But there's a probability or possibility that the price can go down. But buying is my personal bias. So buying is my personal bias. Okay, so let's wait for the open to see if price will react to my bias. All right, so the market opened and I do not trade on Sundays. So I really was not looking to take a trade, but I just wanted to show you guys this example. And boom, where did the market go? The market went up bullish as I suspected. This huge bullish candle here, it's so huge, it has taken up the space that I would have traded anyway if I was looking to take a trade. So the market has landed in a couple danger areas where it would not be fit for you to buy. And so I'll explain how to identify the danger zones in another video. But you can see based on the fact that the candle was green and regardless of the fact that there was selling in the market, the market actually went up. So unless it gives you a decent setup, then you would not look to take an entry, but it really just helps to give you an idea of where price is going to go next. All right, and I want you guys to practice looking for directional breaks and the last color of the candle when you're doing your technical analysis, and you'll see how big of a difference it truly makes. Hope this was helpful to someone, and don't forget to like, comment, subscribe, and share the video, and I'll see you on the next one.